Welcome back to Compound Thesis. Our guest today is Morgan Krupetsky, and she's the Director of Business Development for Institutions over at Ava Labs. How's it going, Morgan?
It's going well. How are you? Thank you for having me.
Good. Yeah, lots of exciting news coming out of Ava Labs lately. So excited to dive in. But, quickly on your background. So prior to Ava Labs, Morgan was at Citi, where she was covering hedge funds and asset managers in the FX space. And later was the chief of staff to the chief compliance officer. Today, we're going to dive into all the exciting news out of Ava Labs, how they're working on digitizing and tokenizing the world's assets, and what the Avalanche blockchain is doing to advance institutional DeFi, or now I think you're calling it OnFi, right?
We're making OnFi happen.
All right, let's make that a thing. Let's trademark it. Here we go. So I'd love to kind of get a little bit more of your background. So you came from a TradFi. You're at Citi. I was as well. What led you to make the jump over to the digital asset space?
Yeah, so I was in TradFi for many years, and also at one firm, like you mentioned, which is for millennial terms, like infinity years. But yeah, and I loved my experience there. The culture was awesome, and just for a variety of different reasons. I mean, when we were on the FX desk, that's kind of at the time when we started hearing about different types of cryptocurrencies, obviously Bitcoin and ETH. Crypto always felt like, to me, like what FX traded like, and felt like, I don't know, 25 years ago. So it was just like a natural extension in terms of our areas of interest, and kind of, clients were asking us about it. Mike Novogratz was pounding the table on CNBC about Bitcoin in 2017. So that's kind of when I started to learn about it. And then over the next kind of few years, really started to, fall down the rabbit hole. And I think for me, what got me really excited was the idea of, exploring smart contracts to potentially create efficiencies in some of the, historically disparate and siloed systems and ways of working, not just within Citi, but within big banks and just at large corporations writ large. A lot of times, companies end up being kind of large stacks of systems kind of piled on top of each other, where, data stops talking to each other, systems start to become more siloed. And so for me, I think that's what kind of was my aha moment, where I got really excited about, let me see how I can kind of help take this forward in this role and in this capacity, where, I'm still talking to a lot of the same institutions that I did when I was in TradFi, but more so, pulling them along as opposed to kind of trying to push from within. So definitely a lot to unpack there, but I'm coming up on a year at Ava Labs. I started May 2nd, and we all know what happened on the ensuing days. So the timing was really interesting, but it's been an awesome experience so far.
I feel like I'm kind of looking at myself in the mirror a little bit, because I started on May 2nd at Compound. So I know exactly how you feel, with all that's taken place over the last year. But it's great to see, everybody, the resilience in this ecosystem, and just continue to move forward, especially on the institutional side, where, the momentum that's been built and the understanding, the education that's taken place over the last, couple of years, but accelerated really in probably the last 18 to 24 months. Yeah. Just means that a lot of these systems are kind of getting put in place, and the door hasn't closed despite all of the calamity of 2022. So it's exciting to see. And I actually, when I was sitting at Citi, like, I was working on a mainframe doing regulatory reporting, and the way that you overcompensate from some of those like legacy systems is just throw a lot of people at the problems, and then that's just prone to so much error. And so introducing technology that can help facilitate reconciliation or execution or clearing or settlement, whatever it might be. I think that's starting to rise to the surface as one of the many value adds for this technology. So Ava Labs is, for those that aren't familiar, manages the Avalanche blockchain, or built the Avalanche blockchain. So can you talk a little bit about Avalanche, about your role there on the institutional side, and the type of kind of clients that you're working with?
Yeah, so I think it would be helpful to maybe just take a step back. So Ava Labs was actually founded by then Cornell computer science and distributed systems professor. His name is Emin Günsier, and his then PhD students, Kevin Seknicki and Ted Yin. Today, Emin is Ava Labs founder and CEO, and then Kevin is our COO, and Ted is our chief protocol architect. Emin's actually been in the space since like the beginning of cryptocurrencies. Back in 2002, he actually created the first ever proof of work crypto and peer-to-peer e-cash system called Karma. And even through to today, you know, he continues to be a notable thought leader in the space, author, lecturer, consultant, advisor to crypto projects like government, central banks, Fortune 500 companies, and really everything in between. So it's interesting because at Cornell, the team discovered a report published by a pseudonymous author called Team Rocket in 2018 that really introduced what was called Avalanche consensus, which is the third ever most novel consensus behind classical and Nakamoto. And that's obviously why the platform is called Avalanche. And I think from there, basically the group went on to build out the Avalanche protocol, which at this point is, you know, open source. It's a public blockchain network. The mainnet was launched by the foundation in September of 2020. So still relatively new in the grand scheme of things. Avalanche itself is an open source layer 1 EVM compatible blockchain for decentralized applications for, you know, a whole host of use cases that we all know and love, everything from DeFi, enterprises, institutions, gaming, NFTs, and frankly, probably a lot of use cases that haven't even been discovered yet. And then Ava Labs is the software company and the license service provider to the Avalanche Foundation. So the labs part really builds the infrastructure and tooling to really drive the growth and adoption of the Avalanche blockchain. And what that means for me and just the broader BD team is really kind of working with partners across many different industries who are either investing in, building on top of, deploying capital into, or somehow using Avalanche. And so as a team, we really kind of help to cultivate the growth and the build out of the network with partnerships, investments, facilitating connections, advisory, or like whatever it is. So it's pretty all encompassing, and it just depends on kind of who the partner is, will kind of dictate the nature of the relationship and the work that we do with them. For me, obviously, I focus on and lead out the institutional vertical, which is really focusing on the whole spectrum of financial services institutions. So we can kind of go into that, but I said a lot, so let me pause there.
Yeah, no, I mean, it's an interesting origin story. I'm going to have to go back and find that paper and read a little bit more about the Avalanche. Yeah, no, I would love to dive into the types of institutions you work with, specifically on the financial services side. So can you give us a sense for like the size, either in terms of number of institutions or like, you know, the structure or, you know, just kind of break that down a little bit for us.
And so we're broken down into these different verticals or use cases. So I lead out institutions, which is again kind of focused on financial institutions. We have an enterprise team that focuses on non-financially focused corporates, as well as a DeFi team, NFT team, gaming team, and then exchanges and wallets. And so all that's to say is while we're split up into these different verticals, you can start to see how different use cases may not necessarily be mutually exclusive. So while I focus on institutions, we work extremely closely with our DeFi team, and in some instances with our NFT team, in some instances with our enterprise team. So we work very kind of collaboratively in that way. From an institutional standpoint, it's really kind of the whole spectrum of financial services institutions. So everyone from all the big banks, asset managers, hedge funds, private equity firms, venture funds, and then the more kind of crypto native versions of those things in terms of liquid token funds, and really everything in between. And within those kind of relationships, as you meet with the different institutions and the different people within them that are focusing on digital asset initiatives, even within these groupings, there's still, you pick up on like a wide variety of how they're looking at the space, their mandates, how they're prioritizing the space, how like quote unquote progressive they are. So it's been a really awesome kind of journey over the past year to really have, I mean, I can't even tell you how many conversations I've had, but to really kind of take a step back and be able to understand the lay of the land and the landscape and really therefore hone in on those that are really trying to kind of drive the space forward. It's funny, a lot of people will ask, they'll be like, how do you convince a certain institution to use blockchain? And I always respond, I don't, because that's not where I focus. I mean, there's enough at this point that are really kind of that get it for lack of a better term. And so that's really where we've been having kind of a lot of success in our partnerships, is honing in on those that understand the space, understand the nuances, help, but then also in turn kind of help them walk their internal journey of requisite approvals and business cases, and really kind of help drive their initiatives forward in partnership with them.
So I imagine, and there's a lot to unpack there. So, if I kind of hone in on the crypto native versus like your traditional asset managers, right? What's the delta there? Is there a large difference in terms of your interactions between, somebody that's like a liquid token fund or a VC that's in the crypto space that's like very much involved on, this space, solely focused on it 24/7, versus a larger asset manager who might have a pocket or a sleeve of their business that's exploring this? Like, are you seeing those two worlds converge a little bit, or is there still a large gap between the two?
That's a good question. I think there's definitely interest from both sides about learning about the other side, if that makes
Okay,
sense.
sure.
But the quote unquote coverage model is very different. I would say with respect to liquid token funds and more crypto natives and venture funds, that's much more kind of understanding what their respective mandates are and what's important for them as it relates to obviously the more crypto native side of things, whether it's projects that are launching on Avalanche, projects that potentially our ecosystem fund is investing in and sharing deal flow, highlighting for them the different kind of projects that have launched and what differentiates them, and making connections with the founding teams to actually use the protocols themselves, and learn more about them more deeply in that way. So it's almost like I feel like in a certain sense I'm kind of back in sales and trading, and kind of highlighting things that I think are important and relevant to them on an intraday basis. And obviously it's not just me, it's our DeFi team and others on my team as well. But from their perspective, they're looking at hundreds of projects across many different ecosystems. So
Right.
we try to add a lot of value in terms of, keeping them up to date with what we think is relevant for them as it relates to Avalanche and the Avalanche ecosystem. So it's much more kind of frequent highlights and updates in that way. Whereas our work with the larger institutions, obviously those initiatives take much, much longer, right? And it's much more kind of consultative and advisory in nature, where we are literally working with them to help make their business cases internally, and helping them kind of work through whatever blockers they may be facing internally. They come back to us saying, hey, this popped up in a stakeholder meeting. How do we work through this? And I think we've had a lot of success on that side also, because not just me, but our head of DeFi and DevRel comes from Citi also. And we have a handful of others on the team that have a TradFi background. So, I think that we've demonstrated, a degree of professionalism and a degree of also, we get it.
Empathy.
Yeah, frankly, empathy, and also understanding that, these things don't happen overnight. And like, we want to be the partner to kind of help you guys succeed as well, right? We want to set you guys up for success. And so I think we understand what that entails. And so I think that's, overall really, really benefited our strategy as well.
Yeah, definitely. I mean, so I spent about a decade in fintech before coming over to, so I left Citi and then spent a decade in fintech, and then landed at Compound about a year ago.
Yeah.
And what I saw in the fintech space was kind of similar to what's happening here, which is a wide variety and a spectrum of adoption of new technologies. When I was in the equity research space, there was a lot of hedge funds that were very much on the forward-looking end of the curve that wanted to consume a lot more data to run through their models to be able to process, earnings releases and consensus estimates in terms of like their long-short equity strategies. And it took a while to get the long onlys of the world, the bigger asset managers of the capital groups and the Wellingtons and the T. Rows that certainly saw value in this information, but needed a lot more of an enterprise, buy-in before deploying the technology. And so, you had to kind of prioritize and pick your battles a little bit, but ultimately the longer term, larger, less nimble shops required a lot of consultation and an enterprise strategy where you're talking to not just the investment professionals, but it's, legal compliance, operations, you name it, to deploy anything, just to get everybody comfortable. And it becomes a partnership, right? It's not a sale. It's not a, business development is oftentimes seen as, creating opportunities, versus helping your clients understand and, working very closely in a collaborative way, and just being a committed partner. So that way you're educating on a regular basis, you're reactive and proactive throughout the process. And I see a lot of that happening in crypto, where it's not necessarily, a high conversion, high throughput type of a space at the moment. It's, much more of the long slog of education, which, it's good to hear Ava Labs is taking that same kind of approach. It's very much a institutional enterprise relationship that's being built. So, so on the back of that, though, I'd love to dive into just a little bit of the architecture of Avalanche. So what's kind of unique about your blockchain is the subnet architecture. And I think it was last week or the week before, you launched Evergreen subnets, which are designed as a suite of blockchain deployments specifically for institutions. And so can you unpack what that all means a bit?
Yeah, sure. So just taking a step back in terms of subnets or subnetworks, just writ large. So subnets were always part of the vision for Avalanche. It was always, going back to the white paper, was always the way that the network that they envisioned the network to kind of scale primarily, which is horizontally through adding more block space, i.e. subnets, or you can think about them as application-specific blockchains. Okay. As a network, you can probably think about it between a Polkadot and a Cosmos. But all the subnets are all part of, they're all part of the layer one network. You can build a subnet as an L2, but generally speaking, it's all part of the layer one network. And technically, subnets are subsets of the validators from the primary network coming together to come to consensus on something. And that definition is very broad on purpose because they're extremely kind of malleable and customizable. But practically, again, you can kind of think about them as application-specific blockchains. So, to use kind of like an illustrative example, basically, like, that a gaming company and a government agency and a financial institution are going to have very different kind of requirements and parameters that are, that they think about when they think about deploying on a blockchain. And so subnets basically allow any of these different types of builders or companies to kind of deploy based on their particular use case. And a subnet can be, one company building one application, or a consortium of companies building one application, or multiple applications on one subnet. It can be configured in any way, just depending on what the particular use case is. So at a high level, that's how I'd kind of characterize subnets. And so far today, we have subnets that are launched and or are in the process of being launched really across all of those different verticals, from DeFi to enterprise to financial institutions, government, gaming, and so on and so forth. So I think the ideal or target state vision from a user perspective is that they'll be able to kind of go from app to app across the Avalanche network without even knowing or frankly caring that they're on one subnet versus another, but it will just be very easy to kind of seamlessly go between those applications, transfer assets between those applications or messages or whatever it is without them even realizing that I'm on a subnet. Frankly, when we go down the line, they won't even know or care that it's on Avalanche. Sure. It just works. But we gotta crawl before we walk. So from an Evergreen standpoint, Evergreen subnets are essentially what we announced a couple weeks ago that, like you said, are subnets for institutional blockchain deployments. And what kind of led to that was, again, a lot of these conversations that we've had with different types of institutions, and these more so on like the more regulated or larger side of things, that have historically been used to building on what we call like enterprise chains. So think about like a Hyperledger, Corda, Quorum, R3, which inherently, allow them to account for certain considerations like permissioning, for example, but inherently, therefore, fragment, liquidity, interoperability, and composability that all comes with kind of public blockchain architecture, infrastructure, and deployment and development.
Less isolated.
Totally. And so we heard some of these considerations pretty consistently. And so we created Evergreen subnets, which basically have a lot of these kind of enterprise considerations and features built in or out of the box as it relates to any type of financial, like institutional blockchain deployment or use case. And so things that are kind of embedded or come out of the box are things like embedded KYC or KYB, i.e. user permissioning, as well as the ability to build in a permissioned validator set, as well as the ability to facilitate a custom gas token, particularly for like regulated banks or other financial institutions. At this point, they can't hold crypto, right? So this custom gas token allows them to use either a valueless token or a stable coin or whatever it is that they want to use that makes them comfortable with,
the regulatory capital constraints that they have. Yeah,
totally. Exactly. And there's other ways to kind of go about that, but that's kind of one that we found resonated with institutions, as well as the fact that, the subnets right now that they're used to building on are EVM compatible. So it comes being EVM compatible, but Avalanche as a blockchain network is ultimately VM agnostic. So as we see kind of greater development and innovation on that front, Avalanche as a network can kind of keep up with that from a VM perspective. So again, Evergreen subnets are really a way for financial services institutions to have like a starting point with their subnet deployment, and obviously can kind of customize up or down from there. But this is something that we've embedded and that frankly we used for Spruce, which we can talk about in a bit. But that was kind of the first example, or one of the first examples of what an Evergreen subnet could look like.
So Spruce is the first example I think that I've seen in the wild. I'd imagine Pine and other trees are on their way to being rolled out. But yeah, so since you just alluded to Spruce a little bit there, can you tell us a little bit more about that for the folks that haven't been able to see the news yet and what they're doing on that subnet?
Yeah, sure. So Spruce is a subnet that's in testnet right now. And to your point, it has embedded kind of KYC and KYB at the chain level. There's a permission validator set. There is a custom gas token. Everything that we just discussed. It's EVM based, but it was really created to be an environment for traditional buy and sell side institutions to feel comfortable. Right, it's a controlled environment to feel comfortable, kind of coming in and really dipping their toes into what it feels like to be on chain, right? To benefit from that public blockchain infrastructure and development, and really composability. And we can talk about like what that looks like, but in a way that, again, is in this like secure, controlled environment that, it's almost like a stepping stone to entering the broader public permissionless space. And so from a Ava Labs standpoint, we didn't necessarily want to be prescriptive in terms of, we've built this and you need to use this and you need to use this application, you need to use this infrastructure partner. But we've really created kind of this like minimum viable product for institutions to come in and start testing out their different digital asset, blockchain, tokenization use cases, right? Because different institutions are focused on potentially different things. And so in this way, from an initial partnership announcement perspective, we've partnered with Wellington, T. Rowe Price, and Wisdom Tree, as well as with Cumberland, as kind of like the initial cohort of institutions. But again, the Spruce testnet in and of itself, it's not like a one and done announcement. Like I hate the idea that crypto is so focused on just like, let's just like announce stuff that's not built. But Spruce is built, it's launched, it has applications including Ava and others. And ultimately now, I think from an approach standpoint, the initial interest has definitely been on facilitating trades using blockchain rails and DeFi applications to facilitate what I would say are like traditional financial services types of trades. So think, rather than trading crypto assets in the first instance, trading things like FX and using DeFi applications to trade FX and interest rate swaps and repo and tokenized deposit swaps. And then as more institutions come on board, as different applications come on board, we'll start really exploring tokenized, equity or credit issuance, administration, trading, and really finally like putting pen to paper as it relates to all the things that I think everyone talks about as it relates to, off-chain asset tokenization or real-world asset tokenization and why they're so excited about it, but actually operationalizing it in a way that we can actually start to quantify what some of those benefits and efficiencies might be.
Does Spruce or any of the given subnets within the Evergreen umbrella, are they asset class specific or are they agnostic? So in this cohort of folks that you have coming on, you just mentioned a wide range of different opportunities, yep. FX, fixed income, equities, like you name it, or is it more of a broad network that will allow institutions to be able to participate with whatever different types of, are they optimized for different asset classes, I guess is what I'm getting at.
Yeah, that's a good question. So I think from a Spruce standpoint, it's really meant to be as broad-based as possible. And I think part of the value in Spruce also is the fact that we have a lot of these institutions who are working on these different areas together. And we have the apps and infrastructure partners there in these working groups as well, such that we're all kind of getting real-time feedback from the institutions to say, this solution is fit for purpose. We need to tweak this a little bit. We need to add this, really such that if and when aspects of this come to mainnet, they're fit for purpose for institutional workflows. That's ultimately obviously what we want to get to. So sure. It's kind of meant to be like an embedded testing ground for different types of applications, different asset classes, to ultimately potentially spin out to be more kind of focused in that way. That's as it relates to Spruce. As it relates to any other Evergreen subnet, I mean, the other one that I would kind of categorize in this broader umbrella is Intain, which was a subnet that launched, I think it was in February, that is very focused on MBS and ABS issuance, administration, and ultimately trading. And so obviously in that sense, that's a little bit more specific. And so it's a long-winded way of saying, again, we're not being prescriptive. We're not, we're the underlying technology that kind of helps to facilitate this. And so depending on the use case, the asset class, whatever it is, that will kind of dictate what is the optimal subnet or subnets, infrastructure architecture to help facilitate that. But the beauty, and we haven't even talked about the beauty of subnets really, which is not just the ability to have the kind of customizability, but to maintain the composability and interoperability with other subnets and with the primary network. So, think about without naming names, there's certain institutions out there that have built certain applications on their own enterprise chains. And I think in general, they'll be hard pressed to get the entire industry onto using their platform.
Right.
But you can start to think about a scenario where you have these institutions building comparable things on subnets, which allow for them now to start communicating with each other through Avalanche's native messaging protocol called Avalanche Warp Messaging. And that is the thing that allows two subnets or subnet with a primary network to communicate. What does that mean? Send assets, send RFQs, send trade confirmation, send whatever type of message between each other without the reliance on third-party bridges, which is like the holy grail, right? Like we want to get to this ability where you can still be comfortable with having your environment, but not be isolated or fragmented from other instances. And that's really kind of the vision that we're trying to build out for, frankly, not just within financial services use cases, but just as a network writ large.
So as you're going through this process, how much of this feedback that you're getting from institutions in the partnership with DeFi is public, or is it more being built kind of off in the background? And then as it goes to mainnet, the learnings from these iterative, sessions or test cases will be made public at that stage?
I think it'll be a bit of both, to be honest. I think, there's certain partners of ours that have kind of come out in support. Like, again, Aave's deployed. We have a few other apps that are in the process of deploying as well, including Volts, which is an interest rate swap protocol,
Yep.
and Dexalot, which is a central limit order book. We wanted to have just like a good base of applications that will have been deployed. And then, we have certain kind of infrastructure partners like MetaMask Institutional and Quadrata and Credo that have come in support of this as well. But some institutions want to come out and provide their own solution, which that's okay as well. And so the idea would be a little bit of both, i.e., as we kind of come upon the findings and as trades happen and as, frankly, new institutions join the fold, we'll definitely want to just keep the industry updated with the developments, but then also really kind of focus on more quantitative kind of like thought leadership and publications as we come up with different findings, right? Like whether they come out to be positive or not as constructive. Like, I think a lot of this is, we want to not just think about all of this stuff in theory, but actually, sit down and compare like for like this is what this looks like in TradFi or in the, in the traditional world. And this is what the OnFi version of this could look like. And what does that mean concretely from an efficiency perspective, and really outlining that.
Yeah, no, I mean, it's super interesting to see all those insights as they come up, especially the theoretically, I think a lot of people talk about the benefits, but it sounds like Ava Labs and all of the folks that you're working with very closely are really focused on actually looking at this in practice and sharing those insights with the broader community, because ultimately theory doesn't turn into practice without that type of work, and it's a good testing ground to continue to push the barrier forward and actually quantify the impacts that this theoretical innovation should have in the real world. Yep. So speaking about real world, there's I just want to like pick your brain very quickly on tokenization, because you mentioned that a few times. So you've partnered with a bunch of different folks. You mentioned Intane, and a lot of folks are looking at tokenizing assets. KKR, I think, announced last year in partnership with Securitize, tokenizing one of their funds on Avalanche through that platform. So can you talk a little bit about the why and why now, what the benefits are of tokenizing an asset? You can use whatever your favorite example is. We don't need to go through the whole spectrum, but yeah, just curious your thoughts on that.
I mean, to your point, like we get the benefits, right? Smaller investment minimums, potentially greater secondary market liquidity, particularly for private market assets. I think all of these things have already been like hashed and rehashed. I think the one thing that I would definitely emphasize, though, is it's not just the tokenization part in and of itself that is like necessarily the innovation. I think at this point, a lot of the tokenization infrastructure generally is pretty like commoditized, but it's really the quantitative kind of benefits of on-chain asset issuance, administration, and then potentially trading, and then down the line integration into DeFi that makes smaller deal sizes economically viable for asset issuers, and that makes smaller investment minimums economically viable for investors, that make the tokenization part make sense. Right. So it's like you have to marry the blockchain component with the tokenization component. That really is why a lot of us are excited about kind of the tokenization of the world's assets. And so to that end, I mean, we work with a lot of protocols and partners, whether it's major asset managers and banks, all the way to individual protocols and projects looking to tokenize, frankly, everything from fiat, i.e. stablecoins, to commodities, to wine, art, music, like private equity, infrastructure, real estate, like so on and so forth. So it's like really the whole spectrum, but it's really, sitting down with our partners to kind of quantify like why, like what part of the asset issuance, investor onboarding, client onboarding process, and fund subscription process and admin, like what part of that are we kind of putting on chain to make the tokenization part make sense is really what we're trying to emphasize. And really, it's also working on with our partners the distribution side of things and the demand side of things, and really increasing like education, lowering the barriers to entry in terms of accessing a lot of these tokenized assets, and really, you know, the exciting part of it is the work that we're doing in terms of integrating with traditional traditional distribution channels. In my mind, is really where we're trying to get to. In addition to kind of servicing, obviously, the crypto native community, but it's really the broader universe of investors, whether retail or institutional, that I think we're trying to get into this space. And so, obviously, from an Ava Labs standpoint, we help to develop that business, i.e., we like bring together all the partners to do that, because we're not a broker dealer or RIA, but I think we have a good roster of partners to be able to help to kind of operationalize this and really take things to the next level.
Yeah, I mean, attacking it from both sides, on the supply side and the demand side, is necessary, because if you just tokenize a bunch of assets, but you don't have the pipes to actually distribute, then it doesn't really go anywhere. And so, having access, democratization of access to financial services, or these different asset classes that have historically been prohibited for retail access, or geographic barriers, or whatever it might be that could potentially be brought down, is super interesting. But bringing in the Robinhoods of the world, or the Schwabs of the world, or the IRA platforms, or whatever it might be, where the assets are sitting but don't necessarily they're in walled gardens and don't have access to the innovation that's happening here. It'll be super interesting to see that all be unlocked over the next months, years, hopefully sooner than that. So this has been exciting. We've talked about a lot. I know I've taken up a bunch of your time, but we really appreciate you sharing all the great work that you're doing across the board at Ava Labs. Before I let you go, any takeaways or closing thoughts?
Takeaways and closing thoughts. I would just say, despite, I forgot how you referred to the past year, calamity, or
I try to be nice.
But I guess I would say, despite all of kind of like the headlines to the downside, I've been super impressed and really optimistic in terms of institutional frankly adoption and a willingness to kind of participate in this industry and really help to drive things forward. So I would just want to kind of share that optimism, I think, with the broader industry, because it's happening, and these things obviously don't happen overnight. But I think that, quote unquote, this time is different, in that I think institutions are really, have come around to see the value in terms of like the underlying tech. And so all that's to say is, I guess, stay tuned. And again, I'm really excited for what's to come.
Yeah, no, absolutely. It's, it's kind of like building the Titanic and setting it out on its maiden voyage, right? So, which is maybe
that's not a good example.
Let's scrap that, Joseph. It's like building what it's like is like building a big ship and finally getting that out for its maiden voyage. Where you're able to, put in all the hard work, do some testing, and then finally, bring it across the Atlantic. But, these things don't happen overnight. And so it's great to see all that are contributing to making that happen. But thanks again for your time. Really appreciate it. It's great chatting with you. And thanks everybody for tuning in. You can listen and subscribe to Compound Thesis on YouTube, Apple, or Spotify, and get all of our episodes on youtube.com/@compoundlabs. Share, like, subscribe, and stay tuned for our next episode. Thanks again, Morgan. Talk to you soon.
Thanks for having me. Bye.